Hold on, guys. I think we might be out of time here. Okay. A. Chris is on. He might answer your question. So, guys, it's my time. I will probably see you next year, and I mean it this time. So have a great rest of the year. Happy New Year's. Merry Christmas. I will see you all later. Thank you for being here, as always.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Thursday. Hope you all had a great Christmas. We're back at it with some slower markets today as opposed to what we had for a half day on Tuesday when the market decided just to rip up. That was probably the closest thing we had to a Santa rally. What was FOMC to the downside quickly came back up with a nice little price action reversal. So FOMC here, Thursday, market caught its breath. Friday was a fake out move, and then you had a nice little bullish reversal pattern. We're right back where we started. Now, FOMC, there's still this little pocket here that has yet to be filled entirely, but by Tuesday's close, it was pretty close to, hey, we did it. We, took away all the bad stuff from FOMC on Wednesday last week. Today, pretty quiet so far, and that's fine. I hope that we stay somewhat directionally neutral today. I hope the markets are pretty chill, today, tomorrow. So I am looking through the portfolio today. Anything I can do, will do. I'm just going to be looking to get positions, and let's just talk kind of top down. So taking a look at Bitcoin, just I had the chart alarm going off, and high, low, lower high, lower low is what I'm looking for. 90K to 80K, looking for some bounces. I'll probably start averaging back in to my wallets. I'll probably start averaging back into IBIT, FBTC. If MicroStrategy is going to reflect this at all, I might look at an income trade there as well. Let's just go from top to bottom. So if I take the peripherals on Bitcoin, BITO has pulled back quite a bit. I took some profit on some long calls. The rest of us have his cash secured puts, which are out to the end of the year. A 16 and a 15. Those are naked puts collecting some income. That'll be fine. I was willing to own shares, but now we're holding up above. I'm at like $7, $8 ahead of my strikes, which is nice. IBIT, this is the BlackRock ETF. We hit symmetry on my Bitcoin measurement. We hit symmetry on my IBIT measurement. So now I'm just looking to see, can I pull back into, let's say, a trading area like this? Anywhere between like 50 and 42.50. I'd say good enough to stretch out some additional trades on IBIT. I'm going to do some just really simple stuff. I'll just take some credit spreads and probably go out 12 months and stack them in. And if I like the levels, I might do, just look at some expirations and see what I can do with them. FBTC, similar. You can trade options on this one as well. BTC, I was going to get involved in this one because it's grayscale. They cut the this is like there's no price data that suggests like, oh, it looks just like Bitcoin. But grayscale, if everyone may be familiar with this, like GBTC was like the first tradable ETF on Bitcoin. And now it's all sorts of different derivatives. But the expense ratio is pretty cheap. It's like 0.15 and BlackRock's 0.12. So they basically created this in order to compete with the BlackRock's, Fidelity's, and the other SEC approved ETFs. So the expense ratio is way less, and still try to make it like a spot exchange, Bitcoin related instrument. Now here's MicroStrategy. The argument on MicroStrategy is it's essentially like Bitcoin on steroids. And if you thought Bitcoin isn't volatile enough, to trade MicroStrategy. So I like it for what it stands for, but I am concerned about the, there's earnings in a stock like this, and in addition to kind of it's all in. Like Michael Saylor is all in on Bitcoin. Michael Saylor has put his entire company all in on Bitcoin. The amount of holdings they have, I think between his personal stake and MicroStrategy as a company, might be one of the largest holders in the world. So they can flourish, and they can also get destroyed. I have no idea. But the premiums are still pretty good, and it's tempting, right? It's tempting to say, look, if I just did something on MSTR, and went out to, let's say, next Friday. Let me change these strikes around. If I were to buy shares at 346, okay? If I buy shares at 346 and I put in the money call at 330, which means as long as MicroStrategy stays above 330, okay, so I'm doing some math. Like, I don't think I'm going to do this because that's a pretty expensive trade. Even on a margin or portfolio margin account, it's still pretty expensive. So if I did 346.50, I buy the shares, I collect 26.50, I get it for 320, I get it called away by next Friday at 330. I'd make $1,000 income on this trade. Now the problem is what if it's below 330? Well, if it's below 330, then it doesn't get called away, and then I lower my cost basis. So my cost basis is 320. I can still repair the trade. It's a little gutsy. Could I get? Let me see what 325 is. So if I went 346.50 minus, I don't think, is this a glitch? I could sell a 325 call and get more money than a 330 call. It's in the money, yes, but let me do the math here. So if I take away 30.30, interesting. Okay, I'm going to take this trade. I'm going to try to do an income trade here. It's a couple of weeks out, but it depends on if I can get for 325. I mean, I'm going to try to get this one here. So I'm going to buy some shares. All right, let me see if I can do this here. So 347.05, I'm going to buy 100 shares. So if I buy, so long stock, buy 100 shares on this particular account, it's going to be 18, almost 19K in buying power. All right, let me see where I get filled. 346.97. All right, I just got filled for 346.84. 346.84. Let me write that down. 346.84. Bought the shares. I'm going to do the same thing here on this account. Buy some shares. 346. So 346.90. And on this account, $346.90. Okay. Trying to get a slightly better break even. 340.95 maybe. All right, 346.90 and 346.84. Got it. Now I can go in and add my covered call. So I'm going to go into this account here. Look at my options chain for January 3rd and sell an in the money covered call. If I do the 320 or 325, let me do the math on this. So shares at 346.90 on the high side, collect, let's say I get 33.85 on the call, gets called away at 320, I make $700. I think I'm going to do that. Okay, I'm going to sell a 320. Let me see if I get $35 for this. So not filling at 35. Let me see if I get 34.90. Filled at 34.90. Okay, so we'll go similar order. 34.90, similar order. Come on. It's like the mid price is slipping away a little bit. Let me do. I'll keep it at 34.90. Let's go 34.60. I'll go 75. 34.75 got filled. Perfect. Okay. So let me do the math here. I just bought shares at 346.90, sold the 34.75 call, which gives me a break even of 312.15. It gets called away by next Friday at 320. I make $785. 3 accounts make $23.55 by next Friday. Okay, so I know it's a little odd, but I'm taking the trade. So income flip. So buy 100 shares at 346.90. Sell the 1-3 expiration 320 covered call for 34.75 to 34.90. You have called away. Should be about $785 income. Profit per account. All right. So those trades are in. I'm going to track that in my spreadsheet here. And I'll throw that in to Pulver alerts. Now you have to have some capital to take that trade. I mean, I'm tossing out $19,000 in buying power for that trade, but return on capital is not too bad. If I make 785 out of 19,000, I mean, I'm making 4% in a week. It's not bad. Like 4% on the risk is pretty good. I'd like it to be more, but basically, I'm like, this isn't something I'm gonna do all the time. I think as long as we have like pseudo quiet markets, I'm getting the premium. I'm getting time where it's like things are maybe just relatively calm on Bitcoin here as we go into the new year. Let's see if I can get the trade called away. That's why I'm going in the money on the covered call, so I give myself a little bit of wiggle room, which would essentially mean that from the low that we saw here around 320, it's like, okay, so MicroStrategy would have to fall back to the FOMC low, essentially. Okay. So I'll keep an eye on this one. Also, the premiums are decent enough that if I have the shares now, I can just lower the cost basis like aggressively. So I'm going to do MSTR income flip. So buy 100 shares at 346 dot. Let me see what the prices were. So MSTR right there. I bought the shares at 346.84, 346.90, and 346.90. All right, so I'll go to the higher side, 346.90. Add a 1-3 expiration, 320 covered call for 34.90 and 34.75. So I'm going to do the conservative one again. So 34.75 credit. So break even. I'll take the high price, which is 346.90 minus the low price of my credit, 312.15. And if it gets called away at 320, I make 785. If called away, keep 785 per account. Okay, so I'm taking this trade on my portfolio margin account. So I have a little bit more leverage with those accounts. It's around 3-to-1, and that way it doesn't take up a bunch of buying power. I'm just trying to do a quick return on risk trade, going in the money on that covered call and getting it called away. I mean, $1,000 would be great. I'm happy with 785, almost $800 too. It's okay. So all right, going into Pulver alerts. Update this one for my stocks options trades. This is going to be MSTR. MSTR. Income play. Buy 100 shares at 346.90. Oops. Sell a 1-3 expiration 320 call for 34.75 credit. Break even puts me at 312.15. If called away, where price is greater than 320 by 1-3 expiration, keep 785 profit. If not called away, where price is less than 320, I'll add more covered calls and aggressively lower the net cost. Okay. Screenshot here and add that into the Pulver alerts. There we go. All right, little micro strategy there. Let's have a look. Let's go top down. So Coinbase, I need Coinbase to stay above 230 for full profit. I think my Coinbase trades are looking good. Get rid of these, go to Coinbase. Coinbase is still up about $5,200 on Coinbase. I need price to stay above 230. So if by January 17th we stay above 230, then that's good profit on Coinbase. I'm happy with that one. Ethereum, I need Ethereum to stay above $60. This is EETH. That's how I traded it. EETH needs to stay above 60, 45, and 30. This is by January 17th as well. So I will be watching the chart alarm set at 60 bucks. Anything on copper? Maybe some stronger support. We still need China to step up its game. This could be a pretty good position in 2025. If copper is kind of squeezing into this area, give it a little bit more time. Okay, a little bit of consolidation. But if copper starts making a move, one thing that we haven't spent a ton of time on is everybody thinks that the U.S. market has proven for the last 2 years it's really good. And I know that if you're paying attention to what's the valuation for the U.S. market or valuations for non-U.S., or if you do the the MSCI excluding U.S., it's like it's beat down to a pulp. We're like 3 standard deviations higher in U.S. performance versus the globe. Anyway, there's that bargain value play of like, well, emerging markets might outperform and small caps might outperform, and maybe they will. It's really not a risk I'm willing to take outside of something that's very small and see if maybe a 1 to 2% stake in like a non-US market can pay out in a big way. But look, if the US is sideways or down with the market cap of like 63% of the global stock market is in US performance, if the US goes sideways or down, it's probably dragging the global economy with it. If China doesn't step up and kind of continue to support the property markets and support the stock markets and get the domestic market anospheres lifted, it's also going to be a lag on the global economy. So, going into 2025, we probably want to see China still reassuring the markets that they're trying to put in some support. The U.S. Still performed pretty well, maintained some resiliency. I think that the world number 1 and 2 have to be pro growth. They have to be resilient, and copper is a trade that I think is going to reflect that, especially with China. So if China gets out of its, I don't know, it's like just investors are just calling the bluff, like, oh, they're not going to be good enough. These stocks aren't going to move. China's it's a dead capital investment. which I disagree with. I just think you got to be careful. So I would like to trade some copper futures. I just don't know if this is the spot I'm going to get the trade that I want. If it is, I'll be watching, like something like that. Right, a little bit of a wedge. You can see this trend line already is out there. I mean, if copper doesn't do anything and just stays in here, well, obviously there's like copper strangle trades. But if we start to go somewhat directional, I mean, that'd be a pretty nice run to get back to these highs again on copper, or at least get to them again and just trade some defined risk bull call spreads. So I'll look and see what I can get. Okay, Japanese yen futures. JPY is getting a little bit weaker. Let's have a look at our currency strength chart. Euro strong, dollar strong, Swiss strong, pound strong. Well, pound you can say is flat. Aussie, CAD, New Zealand yen. New Zealand is getting its butt kicked. How's my Aussie New Zealand doing? Up a few bucks there. How's my Aussie dollar doing? Starting to dollar cost average into my levels. New Zealand dollar is probably getting filled on more. Yep. So there's my New Zealand dollar. How's my dollar CAD doing? Come on, dollar CAD, hit my profit target. I need you to go 70 pips for me. Dollar Swiss, I need you to go 200 pips for me. You can do it. All right, what else? Argentina. Man, that was quick. Pulled back to a 21 moving average. Not good enough. I'm going to see if we get this. High, low, lower, high, lower, low. Anything reasonable. 100, 144, 200. Give me some moving averages. Don't have them yet. Mag 7. Fresh all-time high on Apple. Amazon, not quite there. Google, still making a run. Wouldn't be surprised if we get to fresh all-time highs here. Meta. Meta has a pretty high bar count. I think Meta is going to do something along these lines. I think Meta is going to go sideways at best. If it pulls back a little bit deeper with the market correction, that's fine. I still like some Meta. Mostly income trades. I'm not that interested in owning a stock of $500 anymore outside of I choose the number, right? I'll choose, okay, I'll throw $1,000 at it, throw a couple $1,000 at it. But I'm probably not going to want to own 100 shares at this price. Microsoft. Let me see if I can get a good trade on Microsoft. I've got a couple of them already, but let me check here. I think they closed out for profit. I don't know if I have any more Microsoft in my portfolio because they were already hit. So MSFT, I have a 350 by 345. I believe this is a ratio spread. So 350 by 345 ratio spread, 340 by 330 credit spread. Obviously, those are way lower than current price. Those are likely going to be, out of the money, expiring, full profit for $440 right now, and that's on several accounts. I'm more interested in. I'm not that interested in a ratio spread, but I'm kind of interested in, could I own something back around like if I could own shares at like 385 or less, I'd be pretty happy with that. So let me see if I can craft the trade that allows me to do that. So if I went out to, let's say, pre-earnings Microsoft, okay? Pre-earnings Microsoft. So ratio spread is good, but a credit spread is better. So I have the long put to protect me. There's a dividend also on the 20th. Let's go through 57 days out. All right, let me get some of the implied volatility around earnings. 380, I said, right? 380 or less. If I can own it at 380 or less, would I be interested? I'll get to those, Sarah. I can take a look at some currencies. Okay. Do you see symmetry in the Aussie New Zealand dollar pairs? I just see big ranges on the Aussie New Zealand. So Aussie dollar and New Zealand dollar, I just see larger ranges. Just go back to the swing we saw back in 2022. It's either the COVID swing or the 2022 swing. I'm looking at those as our range levels. Okay, so Microsoft at 385. Would I be willing to own it there? Well, how can I own it there? If I do a 380 by 375, and on the 375 do 2 contracts, so I can get $1.70 credit and be willing to take some assignment on a stock that I think is going to be fine. Obviously, I do my best to, if I took the shares, I would just do a collar trade. I'd buy protection. I'd get it called away for profit. But if I own this thing in the 380 or less, I mean, I get a 20% discount than current price. I can also just generate income if price doesn't go anywhere. So I think I'm going to take this trade. Where's my break even? Where's my ownership? If I took the assignment, it'd be 375 minus 5 minus $1.69. I'd own the shares at 368.31. 368.31 to be my ownership price, and that gets me a 21.3% discount on Microsoft. Cool. So I don't mind that. I'm going to take this trade. See if I get $1.70 for this. So not filling it at $1.70. Let's go $1.69. Try to get the mid price. $1.68. Filled at $1.68. Okay, those are filled. MSFT. Ratio spread, I'm doing a 221 expiration. Buy the 380 put. And then sell the 375 put. $1.68 credit. Willing to own. And that break even would be, if I take assignment, 368.31. 368.32 actually, because it's $1.68. So that is Microsoft. Jamal, that is a question that is probably an impossible task, dude. What income strategy would you suggest to make $500 a week on average with a small account of 5K? You're essentially going to have to risk your account every single week. It's going to be a pain in the butt, and it's going to be very difficult. So I think you need to have an expectation of, on a $5,000 account, if you could make $50 to $100 a week without taking the risk of blowing up your account, you need to just change those expectations, dude. Otherwise, you're taking way too much risk. You're gonna have to risk like 10% of your account every week to have some type of gains like that. So I mean, it's possible, but you risk 10% of your account. You have a drawdown. You have a couple of missed trades. I would just say you want to go after asymmetry. Defined risk option trades, in my opinion, are doable. I mean, I could take, here's an example. Okay, I can go SPY, and I can say, you know what? I think the SPY is going to be higher. So let me go to, I don't know, what's the third, right? The third is a Friday. If we have this Santa rally that continues through New Year's, if the SPY is going to be higher than where it is right now, you sell a put and you buy a put. So something like that. So you sell a put, you buy a put. You want to make $500 on the trade, then here's your trade. So I can make $533 if the SPY is above 601 by January 3rd. I'm risking $780. That is the reward to risk. You know, is it fair? Yeah, I mean, this instrument's probably positive drift. If we have the order flows going higher, it gets above 601, revisits the all-time high at 608, 609. It's a fair trade. Okay. But I think that plan is really, really aggressive, and I think it's unrealistic. So I would say lower the expectation of, you know, make $50 a week, make $100 a week, stay in the game, survive. Don't blow up your $5,000 account by trying to be aggressive, and, you know, watch a $50 to $100 way less risk add up to $500 in a week or two or three, you know, and just, I don't know. It's just my style, man. Grow it responsibly. I just think it's crazy when traders have small capital and they try to trade big, and any type of mistake, they don't survive. You know, you make a lot of money in these markets by being here. You know, time in the markets is like the most important thing. All right. So anyway, just my thoughts. So let me add in this trade here. So I did that. That's ratio spread action. Here's another one, the 221 expiration. Buy the 380 put. Sell the 375 put. $1.68 credit. We'll need to own. So I'm just going out a little bit further. This one's going to be up into the 368 zone. So if I took any ownership, I would be owning Microsoft in here. There. Again, you know, do you want to take the shares with me? Then it's going to take some capital. If you don't want to take the shares, a ratio spread is still pretty darn good. That's still a nice little $1.68 credit. It also ties up a little bit less capital if you have a margin account. So don't mind that trade. Netflix, I'd like to get a pullback on Netflix, at least towards some moving averages here. NVIDIA, we're above 138. I need it to stay above 138 by this Friday. So tomorrow's expiration, if we're above 138, great. If we're below 138, actually below 137, I might actually take shares of NVIDIA. And I still think this is going to head lower. I think NVIDIA is probably coming down to this 200 moving average, similar to Meta. I think we're going to find that 200 moving average with at least some type of decline. Okay. So would I be willing to take on the shares? Sure. Rather than losing, like, I don't want to lose on this trade. So I can take the shares. I got the buying power because of the stock split. I mean, even on my IRA account, tying up $13,000, it's not a big deal. So if I took the shares and I add in a collar, which means I buy a put, I sell a call. If price goes up, I still get it called away for income. Price goes down, I have protection. So I'll probably do like a 30-day expiration and have it protected on both sides. So it gets called away, great. If I have a long put, that's my hedge in case the price goes down. I wouldn't mind owning it. And this is my goal, is I want to own NVIDIA as close to this 200 moving average as possible. So between this 200 moving average and the August low, I'd say this is the area where if I can get some break evens in here, I think there's decent upside to see if NVIDIA comes back to these highs. Okay, so this will be a trade that I got to manage for tomorrow. If we're greater than 138, there's no assignment. So if it stays where it is, there's no assignment. Pretty simple. Okay, let me take on my trade this morning. So right now, this is insane, man. Sticky volatility today. I'm only up. There's no way. Oh, I see. Okay, I can just go after my profit target now. I'm in profit on this trade here. Is it going to cooperate? Possibly. Let me go to my chart here. Price is right in the middle. 1051. Do I just take the winner today? Price seems pretty chill. See if I can get out of here for 95. Let's go 90 cents. All right, I'm gonna let that hopefully close out here in a few moments. All right, NVIDIA, we're good. I'll keep an eye on that one. Tesla, I'd love to own some cheaper Tesla. This is another one, maybe a ratio spread. I did a bunch of ratio spreads in the 200s. You know, I'm less excited about owning the shares, but man, it's like, could I own Tesla? Let's say 300 or 280. Let me see if I can crunch the numbers on this one. I want to own Tulsa, own Tesla. All right, so if I go out through earnings on Tesla and post earnings, let's go out to the monthly February. That's 57 days out. Should be enough implied volatility. So I'm interested in owning around, let's say 280. Okay, 280 or lower. Willing to own some Tesla. Let me come back to this SPX trade. All right, I'm just going to spot check that one. So anything around 280 or lower would be great. I'll keep an eye on this one. So TSLA, go out to the monthly in February. So if I said 280, I mean, I should be able to get plenty of premium for this. If I buy the 280 and sell the 275 and I sell two of the, I mean, that's an income trade. I don't mind that trade at all. So I can buy the 280, sell the 275 with two contracts, collect $2.30 of income. I think that's a pretty good trade. It's a nice little income trade. I don't have to necessarily take on the shares. If I do take on the shares, I own Tesla at 275 minus 2.30 minus 5. I'd own the shares at 267.70, which from current all-time highs, 267 would be a discount of around 45% off. I think that's a pretty good discount to have. So I don't mind it. I'm going to place a trade. All right, see if I get 230 for this one. That's the mid price. 231 would be great. 231 is pending. 230 just below the mid price. I'd hopefully not have to accept less than 225. 229 just got filled. All right. Now 228 is getting filled, and one more account here. All right, 228. So next trade is Tesla ratio spread. So it's a February 21 expiration. Buy the 280 put, sell the 275 put. That was 2.28 credit. Willing to own. And the break even on that own price would be 267.7. Okay, so I got some dollar cost averages in, putting in a ratio spread, 221 expiration, buy the 280 put, sell the 275 put. Willing to own. So out here and down here. And it may not get there. And that's kind of the point, is like, if it doesn't pull back 45% for a discount, I don't have any assignment. This is a trade I continue to, take and monitor and keep an eye on. Right? But if I get income trades on MicroStrategy, income trades on Microsoft, income trades on Tesla, it's a couple $1,000 to move the needle, generate some income, move on. All right, couple more things here. Top down, 10-year yield is higher. Not good. Okay, bonds moving back down to some fresh lows, fresh lows, fresh lows. So so this is the FOMC candle right here, this big red candle. That was the FOMC day on Wednesday. That's the 1 to 3 year bonds. The Fed is essentially controlling the short end of the curve, which means they're controlling short-term interest rates. The longer end, the 10-year, is reflecting on what your, financing terms are going to be. The 10-year going higher is not good. We keep talking about this. I'm beating a dead horse, but it's so important to recognize that this is not good. This makes buying a home more difficult. This makes buying a car more difficult. This makes restructuring any debt, servicing any debt more difficult. Not good. Okay, this either gets under control or it gets worse. It gets worse, that's going to choke growth. It's pretty straightforward. I hope it doesn't get worse, meaning we go up through this 5% where we end up seeing the top in, the market as this was rallying through 2023's correction. This is like a Q2 correction in 2023. And then we had that bottom from, September, October, or August, rather. It was like August to October in 2023. And then we had the yields like really change course. So I don't know if that's the case. Like, is it another run up here and then the market crashes? I have no idea. But hopefully we don't have to find out. But we'll see, because this 10-year yield has done the exact opposite of the Fed. Fed cut 100 basis points, and the 10-year yield is up literally 100 basis points. Complete opposite. So it's not a good thing. Fed is being kind of stupid. Markets making them pay for it. So it's gonna freeze the consumer. That's the hard part. HSI looking a little bit better today. Alibaba fine. Baidu fine. I'm still in some China plays. I've got some exposure. I added some more to my list here. So Costco, I like this. These are some stocks that I like. I've had these on my wish list the last couple of years. Traded them in and out of some income trades. I do have a trade running on. This one is out to, I think I did the January 17th expiration. Visa, it's everywhere you want to be. Where's the trade? I have the 315 by 320. It's a 320 by 315 bear put spread, and it's break even. We're trading at 320. I need price to get back below 315 by January 17th. Maybe it does, maybe it doesn't. But it's a small risk, high reward trade. MasterCard, same thing. This one, I don't know if it got filled yet. I don't see it. So it hasn't been filled yet. I'm trying to get the same type of trade, low risk, high reward. Johnson & Johnson, bouncing off the lows. This one, I do have some exposure on this one. So I've got a 140 put. Is it in profit right now? Nope. Upside down a little bit. I'll keep an eye on it. PGR, Progressive. Some of the insurance companies falling from, their crazy ivory tower of expense. Insurance is more expensive. And these companies are absolutely killing it because of that. So let me make a quick spot check on SPX for a second. Back to break even on the trade. Come on, just chill for a little bit, would you? Keep bouncing around it. Be a range trade. Be a range day, SPX. Be a range day. Be a goldfish. PGR. All right. Anyway, do I like PGR? Sure. Where is it fundamentally looking better? Hopefully cheaper. PGR is Progressive. Let me see what fair market value is. It's not super expensive. Yeah, I mean it's a good stock. Let's see. Is this a stock I'm willing to own? Yep. How cheap could I own it? Let's find out. PGR 27 IV. Dividends on the 9th. All right, just got my SPX filled for profit. Sweet. Nice little winner there. I'll update that. Okay, I'm gonna look at some PGR. Let me do a comparison of PGR compared to some of its insurance competitors. If I go back to my scan here, so we got Progressive, we got Allstate, Travelers, Chubb. Let me do a spot check on those really quickly. So PGR versus Allstate at 195. I mean, they all look pretty similar. Travelers Company. The heck, man. TRV. A little bit more expensive. I'll check the IV ranks here. Do I love it? I mean, they're probably all fine. Earnings growth. Okay, and then Chubb. That's been a popular one with Buffett. CB trading at 277. All right, let's have a quick peek here. So we have some potential move on Progressive, and let's check a little. I mean, they all have good upside. Man, I almost think like a ratio spread is okay. I'd have to like pick one if I'm going to own some shares. I got to pick one that I like, you know. So Progressive checks a lot of boxes. I would say CB. Get out of here. I mean, if I just look at the snowflake analysis, this is pretty clean. That's solid. And then go to CB. Again, pretty solid. Let me look at price to earnings, price to sales. Pretty inexpensive. Yeah, let me check the IV. So PGR is not bad. Am I willing to own it? I mean, yeah, but I'm willing to own it at a crazy discount. So where? I mean, anything like, would 250 be unreasonable? I mean, to get a 17% discount? I mean, more than likely, this is probably going to be a stock that maintains some type of bullish posture. We've had a heck of a run and go back to count some waves, but let's see if we have, you know, a trend line break. We start to base in here. We start to head back up. I mean, I don't think 2025 is necessarily going to be just full rips to the upside and these things can't do anything wrong. But naturally, insurance is going to be like, you, the consumer, is like, you're responsible for the freaking raises in insurance. Your employer, if you have employer paid insurance, it's like, it's so expensive and it's not going to get any cheaper. I don't think there's any way that insurance costs come down. You know, and it's unfortunate because it's like a mandate. You have to have insurance, and yet it's 40 to 50% more expensive. Seems a little unfair, but anyway, you might as well combat the inflation by having a stock that I think would be worth owning. So I guess if I really want to pick my levels, I would say, could I own this at 230? Let's find out. Okay, so I'll go to CB and see what the IV rank is. 34.5. All right, not bad. 34.9. If I went out, so the expirations are a little bit less. That's what I don't love. These are further out for the expirations. But if I went to 57 days out and I picked a level at 230, could I own this at, never mind. I just look at the options chain. If I want to say 230, look at how crappy this is. You're getting zero premium for those trades. So let me see if PGR is any different. And if they're all bad, then I won't take the trade that I want. I might just have to stick to credit spreads, which might be okay as well. So let's see here. 57 days out. Where would I want to own some PGR? PGR, previous levels around 218. Okay, so anything 218, 215 would be okay. Again, premiums are not that great. If I were to buy the 210, sell the 205, 65 cents of income. Don't love it. Don't love it. I'd have to go a little bit more aggressive on the ownership. You know, 230. Own this thing around the 200 moving average. The problem here is I'm not going to get a lot of premium. You know, so if I were to say, okay, 229, buy the 230, sell the 225. I mean, there's an income trade. It's on the outer end of the expected move. There's still a potential chance of assignment. I've got a probability of profit around 85%, which is pretty darn good. Considering I'm trading at a 70 delta or a 25 delta, that should actually be a much lower probability of profit. I find that kind of interesting. Now, would I be willing to own these shares? Yeah, I could own the shares, getting some nice income if PGR by February 21st is steady to higher. You know, we're coming back into this 200 if we bounce off of it. So if we come in here, bounce off of it, we have all-time highs, we have a previous swing low, maybe this is the new trade. You know, maybe it's a range. We had such a big trend, maybe it goes sideways. Well, I can still make money going sideways. So I'm going to take this trade as an income play. 230 by 225. I'm going to try to get 260 to 265 credit. And this is out to February 31st. Let's give it a whirl. Fill the 265. That was good. Okay, let's try that here. Yep, and try that here. Yep. Perfect. Okay, PGR. 2/21 expiration. Buy the 230 put. Sell the 225 put. 2.65 credit. And I'm willing to own, and if I was assigned, it would be 225 minus 265 minus 5. I'd own it at 217.35. Okay, so 217.35 from all-time highs would be around a 20% discount, 19.5% off. So for a stock that has, you know, fair market value of $400 to $500, and I could own it well below half of that, I think that's pretty good. Obviously, there's sentiment involved. There's healthy bull market. There's, you know, what's a good stock versus a bad stock. I'm pretty sure the financials and the cash positions of these insurance companies are insanely good. So, yeah, I mean, but do I want to own them like outright and just take it on and say I'm in? No, I'm going to play the game with options first. Okay. All right, let's talk some currencies. I'm going to keep scrolling through some of these other things. CBI did, Palantir. Palantir, I don't know, man. I'm a little skeptical of this one. I don't know if the premiums are good enough. I don't think the IV is good enough. PLTR, we're at 42. If I went out through earnings, let's say I went out to the February expiration, is there any way that I could own Palantir at $45? Well, let's check and see snowflake wise, like, do we have a good outlook on Palantir? So it's you know, for a fairly new stock, it's doing okay. It's a little on the expensive side with price to earnings, price to sales, like a crazy amount. This is what I don't love about it. You know, it's priced at $80 and the fair market value based on a discounted cash flow model is under 40. So that's like saying there's no way that I want to touch this thing unless it's back down to these previous highs. You know, could Palantir be a stock that, I mean, it's now in the Nasdaq, is that correct? Did they add it to the Nasdaq or S&P? Did PLTR get added to, is it the Nasdaq? Set the transfer common stock November 26th. So yes, to the NYSE. Yeah, so it's officially in the Nasdaq. It's part of the QQQ now. So you're going to get some automatic order flows. It's been a big contributor to some of the QQQ gains this year, along with other ones. I mean, market cap wise, it's still not huge, $188 billion. It's not your Mag 7. It's not your Mag 8. But man, what a crazy run this has. Like through 2024, you've got basically a $15 stock that ran to $80. That feels pretty good, right? It's up 400%. Now, do I trust that is sustainable? No. And I guess the question is, could I own this thing at 45 or less? And I probably can. It's going to require some creative option strategies. Now, if I did the 50 by, maybe the 5750 by 55. Let's see. I want to own it around like $45. It's going to be pretty tough to do here. If I were to do something along these lines, so I buy the 50, sell the 45, and let me see if I can increase this. So if I did the 45 times 2, the credits aren't good enough. I'd be willing to own the shares. I'm not really getting any income on the ratio spread. I don't like that trade. Fudge. I'm just not getting the premiums that I want. I could go out further. Let me see what March looks like. Is it a little bit better in March? Maybe. $0.81. Play around with the numbers here. I get 50 cents, own it around 44 and change. I mean, it's one way to do it, but it's only making me $50 income, so it's not that exciting. I think I'm just going to wait. You know, I mean, if Palantir starts to come back to reality and finds the 2150 or any moving average here, then I'll just start looking at dollar cost average. I think that's a little bit easier than trying to get options that are paying mediocre premiums right now. But I will set a line there. All right, let's talk some currencies. So DXY, as I said for the last month or so, don't fight this thing. As we talked about this squeeze and this bear trap in September, don't fight this thing. The dollar is going to be an interesting basket to watch. Look, I personally would not be surprised if the dollar gets a little bit stronger. You know, and when I say a little bit, like it could potentially come all the way back up to these 2022 highs. Just be mindful of that. If we get some chop in here, like this is our kind of broadening pattern area where things get a little bit more noisy. But I just think that the dollar right now is a currency and an economy that's pretty darn solid and resilient, right? Like the dollar, the Fed, everything going on in the U.S. economy, it looks better than the Eurozone. It looks better than Japan. It looks better than every major market right now. So the only argument is like, well, the dollar's over, you know, the US market's overvalued. Sure. But it's like the only game in town that's working. You know, if people want returns, it's been US or nothing. So point is, if the dollar continues to be path of least resistance, don't fight the dollar. I could see this either being noise, or I'd still be interested in buying lows, or we break out and we continue to drift higher and this thing runs all the way back up to levels here. And I would say, let's get really excited about this area. If we are offered an opportunity to short the dollar and it's just a beautiful spot, then let's short the heck out of the dollar and make a ton of money in Forex trading. Okay. I can trade UUP if I want to trade stocks and options. I can trade currencies like crazy. But I am not going to fight the dollar now and say, like, this is the top. I'm just not. Like, this to me is more technical. That to me would be much more of a liquidity sweep. And then we end up finding that it's still going to be a multi-year range anyway. So I would not force trades to short the dollar. I would wait to see if this does, in fact, come up to maybe this 109 handle and then reject, or it just stays bullish. So two outlooks. One is this. If the dollar pulls back at all to the same lows, 105.50, okay? If it stays above it, I'm still bullish on the dollar. That's a support level. All right? If it pulls back here for a dead cat bounce and starts to go lower, then yeah, maybe we have this is our shorter term range on the dollar, or a more intermediate range on the dollar. But something tells me that if this just keeps drifting higher and we're in this new momentum phase for 2025, that this dollar index might be getting to 113, 114. It's going to put a lot of pressure on, and look, it's not a good thing, right? If the dollar gets stronger, it's going to hurt multinational trade. It's going to hurt exports. It's going to be you're going to see President Trump probably complain about the dollar. There's going to be more pressure on the Fed to cut more rates. Like, I don't think these are good. So if the dollar gets too strong, it's going to have a lot of consequences. But I don't know. So I just think for that reason, it's like, I don't know where it wants to go. I wouldn't fight it. I wouldn't call the top. I'm not interested in shorting the dollar. I would say what we do get is we get an opportunity at a much better, cleaner technical spot to sell the absolute heck out of this thing and make a lot of money with a lot higher probability with a much cleaner trade. Does that make sense? All right. Anthony, sure. They're disinverted, dude. I mean, if you're looking at the 10-year, the 10-year 2-year disinverted, the 10-year 3-month disinverted, all it means is that based on the last 40 plus years, it's been a really good undefeated recession indicator that we're on borrowed time. If the market, repeats itself, I know we've had the longest, deepest inverted yield curve that we've ever seen from the 10-year and the 3-month, but it's not a timing mechanism, right? Because as soon as you go inverted, everyone's like, oh, recession. Well, we've just ripped to all-time highs for the last 2.5 years. I mean, since the bottom of 2022, this market has gone up 70+% since those October lows. So inverted yield curve is not a timing mechanism, but it is a borrowed time mechanism, because the disinversion typically means a recession is coming, and it's usually within, I think the average is 12 months or 14 months from the disinversion. So that's what I'm looking for. Like, I think there's a lot of reality that the market's going to have to cope with in 2025. I just don't know when. So I'll continue to trade. I'll monitor my risk. I'll wear my seatbelt. I'll wear my hard hat. Try not to lose my butt. Try not to do anything stupid. But I think we're on borrowed time. So if we get through, the first half of 2025 without any major scratches and dents, okay, fine. But the second half of the year, I'd be interested to see things like kind of top out. I think growth could top out. I think earnings and valuations at the levels they are, there's a lot of proof. Like the level of expectations, like the bar is set so high right now for Mag 7 has to keep performing well. Mag 7 is really the only little group of stocks that's performing and dragging the whole market higher. I mean, it's either everything has to step up and perform well, or Mag 7 is going to start plateauing and it's going to be a reason for the market to drop. We still have the 10-year yield going higher, which I still think is a huge catalyst for choking out growth. And with it being disinverted on the 3-month, I think it's a matter of time before we actually have to face a reality with a recession. A recession doesn't mean a full-on bear market. A recession could be higher stocks, right? A recession could be, well, inflation's higher. The only way to combat inflation is being in stocks, being invested, having some assets. So it doesn't mean the stock market has to go down, even though we could be in a recession. We also might have a sector by sector recession as opposed to a full-on, like, everyone expected recession, and it's like we've experienced 2020. Where it was like a horrible month. We experienced 2022 where it was 9 months. We experienced 2008-9 where it was, a year. It hasn't felt like that. There's like this sector's underperforming. They call it a recession, but it like gets picked up by other, performing sectors, and it just hasn't been easy. I mean, the market's gone higher. It's pretty simple, right? But I said borrowed time. So we'll see. All right, dollar index. Any questions on that? I'm going to stay dollar index out of the way right now. The only trades I'm in, dollar CAD long, which I still like. Dollar Swiss long, I still like. Aussie dollar, New Zealand dollar, I'm trading small. I'm working through positions right now. I'm comfortable with those drawdowns and those little positions. I'm not worried about it. Okay, what else? Let me go back to my workspace here. So oil, still just absolute chop suey. This is a big inflation story. Oil higher. Okay, I just got to fill a Microsoft or a MasterCard. Okay, that's fine. Oil higher, bad for inflation. Oil lower, breaking lows, good for inflation. This is another big component to how this inflation story plays out in 2025. We've obviously seen prints September, October, November. All the prints have been pointing towards higher inflation. Oil, energy prices. The U.S. probably is begging, oil companies to continue to drill, continue to add projects, continue to look at drilling domestically. We're going to look at some major deregulations coming in 2025. If that's the case and we break this floor on oil, that does help the inflation story a lot. If it just stays sideways, it's like we're on the cusp. Could inflation go higher? Yeah, sure. Could it go lower? Yeah, maybe. But I don't know. I think oil, you just have to watch. I don't have a trade on oil. Obviously, it'd be a good little strangle the last couple of months. I just think it's also too volatile where I'm not going to force that trade. So anyway, that's that. Gold. Let's take a look at gold. Somebody said earlier, like, why is gold up today? It's like, I don't know. Do you think this looks up? I mean, yeah, for the day it's up, but I'm still looking at gold as a potential correction. I still like gold at the 200 moving average. I still like gold at buying lower. And, similar to this big bull trend, if gold is sideways, so be ready to trade in 2025. I think that having a bottom in 2022, a market that looks like this, since the bottom of 2022, okay, this was our bear market in 2022, right? This is what it looks like from October of 22 to now. That's it. So would it make some sense that the market is sideways, where it's not bad, but it's not good? We've kind of capped out earnings. We've got valuations at these levels that are kind of unsustainable. Or would we have a little bit of a pullback? Yeah, sure, maybe a pullback. But I'm thinking more this. If that happens, you got to be ready to trade. So I'm just going to be active, as always. But be ready for it. All right. So gold, silver, I'm just watching. I still like silver. Technically, I still like silver a lot better than gold. I think silver still has a nice measure move towards $36. Bitcoin, anything back into the 90 to 80K mark, I like that. We talked about those earlier. Did the Mag 7s, did some other, added watch list items here. Let's talk currencies, and then I'll let you go for today. Aussie CAD, I'm just hanging on to this one. I'm going to see if I get I'm going to add more to this if I get a trend line break. It's not there yet. I'm kind of in my risky zone. It's not a done trade. I mean, this is where I'm kind of stopping myself out. But if I get a turning point where this can work its way back up, then break the structure, turn back up here, look at a pattern, stack some buy stop orders, get back to my profit target around 9,400. Okay, Swiss pairs, I'm still going to hang on to the positive swap. Aussie Swiss, I am prepared, if needed, to take this back down to flash crash lows. And then I would adjust my profit target from up here to down here and still make profit on it. So if Aussie Swiss comes back down to lows again, I'm going to stack up some buy stop orders, get these things to cross, get back up to my center high, take some profit. Now that could be target one. If I'm right on a double bottom pattern, then we're going to double this move. So this move, double that move. I mean, we could see this Aussie Swiss back to 62, 6,300, but I'd be happy taking a bunch of profit there at the center high. That's a little bit easier profit target. Yen crosses, I'm not even going to look at them. Okay, do I like the yen? No. I'm going to trade Japanese yen futures. That's about it. Aussie New Zealand, I'm bullish. I'm trying to get back to this previous high at 11.75. Aussie dollar, I'm trading it very small. I am dollar cost averaging into 3 positions, and that gets me all the way down to 6,000. Okay, if we came back down to 6,000, look, I'm not saying that's the stop loss. That's a level that I would say, I would trade this back down to like 5,500. This to me is going to be, look, I will say this. I'm going to play the game of this dollar index through something like the Aussie dollar, which I know that the euro dollar is a much tighter correlation, but I think the Aussie dollar has a good opportunity to be kind of a slingshot trade. So we're facing some pressure to these lows in 2022. The next big level is the 2020 sweep. So do we come all the way back down here, going to test that low? Maybe. So I'm going to build something in here, okay, and I'll trade it really, really small. And if it comes back up to this level, look, I can take maybe one loss and then turn these into dollar cost average positions that pay out all the way back towards like 6,200. So am I willing to take this ride down 500 or 600 pips? I'm not going to like it, but I'll keep the drawdown probably less than 3%. So the answer is yes. Because if I can take a 2 to 3% drawdown and turn that into, 5 to 8% gains, I'm going to do that. Right? But I'm going to be treating it like very carefully, really small trade sizes, and then build my position. So I'm just testing right now. And if we come all the way back down to like 56, I'm going to test maybe 1 or 2 more times, wait for my structure, wait for my patterns, and then trade this trade. So if I lose a couple here to get back to that high, that's fine. But if I take stacked winners, I can make a lot more money on the way back up. Okay. But I don't think that we necessarily drop all the way to 56 or 5,500. I think we pull back to like 64, 6,500, and that's the case, I'll take profit. So if this level holds, I mean, it's pretty simple. If this level holds and it bounces there, or if we sweep this low and then we bounce back up to 64, 65, then I'll take profit. It's fine. I'm looking to see if this range is going to be safe. And if it is, we'll make some money. Okay. All right. CAD Swiss, I'm still holding long. Swiss yen, I'm still short on this one. It's garbage. Euro Aussie. I'm not Euro Aussie. I'll just say this: Euro Aussie, Euro CAD, Euro New Zealand, Pound Aussie, Pound CAD, Pound New Zealand. They're volatile. They're choppy. Find your highs and lows. Trade good price patterns. I don't have a good direction on any of them. They're still moving within like bigger ranges. They're super volatile currency pairs. I don't love them. Okay. Euro CAD, nothing. Euro Swiss, I'm still long. I'm looking to see if we get back to parity again in this one. Euro Pound. Okay, Euro Pound is coming back into its break even for me. Fine. Pounds, Euro New Zealand's. It's like, what do you do with this? The only thing that's stopping Euro New Zealand right now is right here. That high. Does that high matter? I mean, we had range lows, we had range highs. I mean, it kind of matters. So if there's a topping pattern, doesn't happen yet, but if there's a topping pattern here, that could be a good spot to sell. Take it back to equilibrium and say that we've got resistance here, support here. We form a top, we look at a pattern, and then trade it back down to the halfway point. I could see that being a good trade, but you've got to spot a pattern first. I don't have it. Okay, euro dollar, you're trading the dollar index this way. It's heading lower. I'm not interested. I know some traders were short, right? I talked to a lot of traders that were short around this 105, 106 area. That's a great trade. Okay, how much lower does it go? I mean, I don't think it's out of the cards for this thing to get back to parity. I'd say from 1.00, okay, down to like 96. I will say this: I may not take the ride down to parity, but I would be pretty interested in the overshot conditions of if we hit parity or lower. I'm looking at this market to then come back to 105. So again, dollar index wise, euro dollar wise, we could have a really good trade lining up later. Not yet. but I'll be watching. Parity is a big deal at 1.00, 96, right where we had these lows in 2022. I'd love to revisit those levels. Okay, pound Aussie, no. Pound dollar, I got out of this trade with a small loss. I was getting in around the trend line. We popped up here. I had some profit on one trade and a loss on another trade. I took a net loss of like minus 30 pips. So it was manageable. I'm glad I got out when I did. It bounced off the 200, and here we are back to the lows. I just thought dollar index looks like it could still go higher, so I mitigated that trade on the pound dollar for a small loss. Pound New Zealand's, oops. Pound New Zealand's, you know, I don't know what to make of this one. It's gone through all the highs, right? So we're at higher highs, higher highs. What do you do here? I don't know. I mean, it's trending up. So does it stretch to some type of channel like that? Maybe. Does it have a topping pattern and then come back down and find some support? Maybe. It's like you're getting these runaway moves. Like, look at how this thing stretches and then pulls back. Stretches and then pulls back. Stretches, probably pulls back. But to do that, you know, stretches and pulls back. You gotta be able to spot those topping patterns, and it could be a little exhausting. Okay, Daryl's asking about Russell. I thought over the last week or so on Russell. I don't really want to trade the Russell. I think the Russell is going to be one of the most vulnerable indexes for the U.S. because if we have the Fed is all of a sudden switched into like a neutral tone. You know, I wouldn't say hawkish. I mean, yes, they called it a hawkish cut, but it's now a neutral tone. They're not really looking to cut rates. So the Russell's performance is probably lackluster. You know, and you've got most of the Russell 2000 unprofitable. I don't like that. It's like if I put, you know, I'm gonna invest in something that has 2,000 stocks, it's totally diversified in small caps, but you have 70 to 80% of the companies not making money. That's a terrible index. So I'm just not that interested in trading the Russell. I do have some shares. I have them covered at 225. They might get called away. They might not get called away. If they get called away at 225, I own the shares at like 197. If they do get called away, great. If they don't get called away, then I'll just keep lowering my cost basis. My break even's down here. You know, there's some bottoming opportunities right around that 200 EMA, but that's about it. I wouldn't be, I don't know. I just wouldn't be crazy aggressive. I think 2025 is about quality, resiliency, and just don't get into stuff that's super volatile, potentially super volatile, or without having some protection. You know, so Russell's probably my least favorite. I would say S&P, Nasdaq, Dow, in that order. Russell's number 4. You know, do I like it for what it represents? Sure, but it's just you've got too many companies that are unprofitable that are in the Russell, and I think it's going to be a hard index, especially if the Fed's not going to be accommodative cutting rates, and especially if borrowing costs are going higher. So, just my thoughts. All right, anything else in the currency land? Let's go New Zealand CAD. Watching this one just like I am Aussie CAD. I think it's just a big range. This is the bigger swing. You know, here's a pretty easy trade on New Zealand CAD. If you're buying and you're buying and you're buying, it's a range trade, right? You're buying the lows, you're buying the lows, you're buying the lows. This currency pair is one that it barely trends. It usually is just bouncing and bouncing and bouncing. It's easy to trade. Lots of balance, lots of efficiency, lots of pivots, lots of everything. So I like this as just a range trade. I've been waiting for this to turn the corner and see if we can get another chunk higher because it's been making higher lows and higher highs until this one. Okay, it just took out those recent lows. So if this turns quickly, then maybe it's kind of saved. But if it is breaking down, it doesn't mean it's like, oh, I'm just gonna stay in it. You know, I'll stay in the trade, buy this low, buy this low, buy this low, and just dollar cost average into a gain. Okay, New Zealand Swiss, I'm still long. Like I said, I'm willing to take this one down to the flash crash lows from 2024. That's August, and just test, not necessarily say that's the bottom, but just test it. So if we come back down to this level and we, you know, break this structure here, okay, let's look at a bottoming pattern. Let's look at some reversal pattern. We've got plenty of room to stack up some buy trades. We get back to a center high, we double that move. It's like big profit target right here and big profit target right there. But you've got to potentially wait for more of a clear sign of bottoming. S&B's have been cutting rates. That's great. You know, but China has been hurting the currencies. Aussie and New Zealand have both been getting hurt a little bit by the inconsistency and lack of follow through from China. So we'll see, but their yields are fine. Their central banks are still holding rates pretty steady. Okay, New Zealand dollar still staying small, still dollar cost averaging, and same thing. We've got the 5,500 2020 crash low. We've got the 2022 low, and New Zealand dollar is down to all those levels. So I did I not get filled in that third order yet? I've got to be close. Okay, so this third order at 56.05 is still pending. All that's going to do is move this blue line lower to a break-even point. That's fine. I'll keep this really small and potentially take this down to, maybe 55 or so. But just watch. Just watch, trade small. That's what I do. That's what I'm doing here. No crazy risk. Dollar CAD, looking to get up to 44.80. That's my profit target, and see if that hits, in the next couple weeks. Dollar Swiss, taking this thing all the way to 92. If we have any pullbacks, I'm adding to it. There's a nice little pocket in here. I wouldn't mind adding some more and then stacking up a couple more trades. Okay, in fact, I'm going to go ahead and stack up a 90, 50, 91. Yeah, I'm going to stack this up. So 90, 50. Let's go 90, 50. And take profit's going to be 92. Did it just buy me? Freaking idiot. I meant to do a freaking buy stop order. It doesn't matter. I mean, it's fine. I just got in now. So create new order, buy stop 90.50. There we go. Change the trade size here so it's non-FIFO. Take profit at 92. Now I should have the line there. I'll do another one at 9,100. So let's do trade 2603, 9,100, and take profit at 9,200. Buy stop. Boom. There we go. So I'm stacking up the orders. I'm adding to my winner, and let's see if we go to my 92. So I added a trade in at market, add, build this position up, get this up to maybe 15,000 to 20,000 units. And when it's, net all said and done, should be a nice chunk of profit. And if we get any pullbacks, I'll add a pullbacks too. It's all good. Any okay, so I'm good there, and that should do it. Dollar CAD's good, dollar Swiss good. Somebody asked about dollar yen, last currency pair. Dollar yen's heading higher. Don't fight this stupid currency ever. You see bullish, you trade bullish. You see bearish, you trade bearish. Don't fight it. This is the high, this is the low. Market likes the dollar, and it's still trading the carry trade from the yen. So do we have to deal with another dramatic, unwinding of the carry trade? Yes, no, maybe. I have no idea. But if it makes sense, there's a spot for resistance that the dollar yen comes back to. Do we start dealing with intervention all over again with the Japanese yen and Bank Japan? It's so difficult to trade. But right now, if you see bullish, you can trade it, and there's room to get back to those highs. I told you already, I'm probably not trading a lot of currency pairs and FX with the Japanese yen. What I'll do instead is I'll trade defined risk on Japanese yen futures. That to me is the easiest, more cost-effective way, because I don't have to be perfect on the top or the bottom. I can just define the risk and take the trade. Okay. All right. Anything else? For the day, we're still pretty sideways and flat, considering, Monday and Tuesday were pretty directional. We're right back where we started, or very close to it, to taking away all of the FOMC decline that started aggressively at the 2 p.m. Cut that we saw. And is this market over tomorrow? Today, tomorrow, next week, we have limited trading because of New Year's Eve, New Year's Day. So just be careful out there. Give yourself some time. Is this market able to get back to all-time highs? It's close. I mean, we're at SPY's at 601. If we get to 609, we're back to all-time highs. So can we get there? It's going to be close. Market's probably going to make a valiant effort to get there. I do wonder also if this is a, we have some structure in here. We had that big pullback from the FOMC. We come all the way back to the same levels. Do we have some sideways movement? Is this a bullish pattern in the making? Right? If we break those highs, momentum begets momentum, all-time highs. You get pretty good gains when you buy all-time highs. It seems counterintuitive, like you see in a lot of trading, which is buy low and sell high. But in the stock market, they go higher. It's like every high just breeds more sentiment and optimism, and it just goes higher. So it's possible we just put in an FOMC like bottom, and it's now a reversal pattern, and this market might find a way to keep grinding higher. Okay, so it's like price had a second until it didn't. And so if we're back up here and we're sideways and we're still sitting at these all-time highs, yeah, it could break back down. We could fail, but we could also just melt up. And the market could still get pretty excited about this optimism in 2025, Q1, Q2, all these good changes. And it's like until it happens. So the market get all excited until maybe it's a reality. But just be ready in 2025 to be trading. Okay, be a trader. I don't think it's going to be bull market genius year. I think it's going to be a year you got to grind. So maybe I'm wrong, but I'm ready to grind. So, all right, I'll let you go for today. Thanks. See you soon.